Averages. And joining us now is Dan Geltrude, who's the managing partner at Geltrude and Company. Dan, good to speak with you as always. Let's dive right in the interest of time. Stocks, they closed higher. The jobs report yielded positive news with 4.8 million jobs re-added back into the employment situation, and the unemployment rate that fell to 11.1%. So does this news change the way that you would project the shape of our economic recovery?
Yeah, I would. I really see this as fantastic news on multiple fronts. Look, what we've gone through in the last 3 to 4 months has been unimaginable, right? Who could have possibly seen that we would grow into a pandemic and have this type of impact on the U.S. economy and, of course, the stock market? So when you look at the direction we're going in, over the last 2 months, we have picked up 7.5 million new jobs. Now, when we consider that we were down 21 million based upon what was happening with COVID-19, we've picked up about a third of that. Now, that's a very respectable comeback. Those trends are going in the right direction, and I think that we have every reason to be optimistic right now. However, I wouldn't say we're on solid footing per se. We are still in a fragile state, but certainly let's take the good news while we can get it.
You know, I'm going to ask a very simple question that may have a complex answer, but in terms of the monthly reports that we get, which of course they take that survey that is at the midway mark through the month, versus the weekly jobless claims report that we see. The discrepancy there is the continuing claims that we continue to watch versus what we see on the monthly basis. Can you break that down for us and why we saw continuing claims tick up a little bit on the weekly jobless claims number versus what we're seeing in the monthly employment situation report that we get from the Bureau of Labor Statistics?
So great question. So when we look at this, let's first be clear, all of this information is lagging, right? This is what's already happened. So you have to look at, as people are claiming unemployment, there are delays in that process. And when we get to the end of the month and we look at how many new jobs have been put on, there's a timing difference between the two. So I know it can be confusing, but we really have to look at, most importantly, the new jobs that are being put on, particularly when we're looking at 50,000 new cases of coronavirus, yet the economy is growing in each state. So that's pretty incredible. And to some extent, those numbers may not make a whole lot of sense, but we have to go with the direction, which is upward.
Well, the direction right now for a couple states is reclosing, and unfortunately the upward direction for the number of coronavirus cases is also upward on a daily basis. We're seeing this increase, and as we're tracking that and some reclosures of local economies, what does that spell out for how the markets may react even next week or the week after, as we're seeing major corporations and small businesses alike have to reclose some of their own facilities that they were itching to start to reopen so that they could recognize revenue once again and get the wheels churning and active in time for the summer?
So the two greatest threats that the market would have right now, first, you have to look at what impact Fed policies are gonna have. As I said, we're dealing with a very fragile economy, so we have to look how the Fed reacts and what their policies are, and the market is going to have their eye on that. Probably more important is the trajectory of where coronavirus cases are going to go. Because right now we are seeing spikes around the country. Now keep in mind, those job growth numbers are lagging indicators. Now we're going into July, and we're going to see whether this trend is going to continue. Because the one thing that could absolutely be a fly in the ointment for both the economy and the market is where this virus goes. And I think the market will get skittish if we're seeing states pulling back and going towards stay-at-home orders once again, because what that's going to mean is more furloughs, more layoffs, and I think this second round, if it were to happen, could be more devastating than what we had the first go round with the virus.
It's certainly a grim picture that we're trying to grasp right now. So thanks for really laying that out for us, and particularly on the Fed's point, because we were having this discussion yesterday as well. And when I think about the Fed and their inclusion in helping support the economy as we've seen its decline, and also trying to be part of the rebuilding process to provide that backstop. What happens when that backstop gets pulled out as the economy shows signs that it's starting to rebuild successfully enough? Does the Fed then have to anticipate staying in some of their long-term facilities, whether it be Main Street lending, whether it be some of the bond purchases, corporate bond purchases, or keeping interest rates at zero for longer than expected? And how will the markets react from your perspective?
I think the Fed has to stay in the game. This is not going to be a situation where the Fed is going to say, all right, we're out of the woods, we're going to be able to pull back at this point. That cannot happen. The Fed really has to see this through. And I'm even going to tell you where they're going to have to stay involved until, and that's until that we have a vaccine, or we're very close to developing a vaccine. Because once that happens, let's just say we had a vaccine today, I think that has an impact on the market between 3,000 to 4,000 points right out of the gate. So that is the key component as to where we go. And let's also keep in mind too, as the economic numbers continue to get better, you're going to have Congress look at this situation instead and say, do we still need stimulus? Now, if Congress starts to pull back on stimulus, you could see the market react to that and say, hey, wait a minute, are you pulling back out of this situation? Because perhaps we're not out of the woods. So I think between what the Federal Reserve does and what Congress does, based on the path of the economy, big impact on the market going into the next few months. No question about it.
As we anticipate that every country is going to try and get their hands on whatever the production looks like for a vaccine. Right now, one thing that has been illuminated amid this pandemic is certainly the disparities that do exist, whether that be some of the economic disparities or healthcare disparities among certain parts of the population. And so when the vaccine is adequately available, how do we ensure that that disparity in the interim and early stages of getting to a full recovered state, how do we ensure that that gap does not continue to widen for some of those areas that have been exposed as being the most, the most ill, or perhaps most impacted, I should say, as a result of everything that we've been watching?
Yeah, I know exactly what you're saying. And the way I think that government should be handling this process when we do get to a vaccine, because at some point I believe that we will, is they have to push that process down to the local levels, state and local. Those are the people who are going to be best equipped to be able to make sure that everyone is going to be able to get the vaccine. If we're going to do this on a federal level, I just don't think that the federal government is going to be able to have the resources to be able to pull that off effectively and certainly efficiently. So I believe it's a matter of get it local. People who have their hands on the pulse, who are in contact with the people who are going to need the vaccine, which of course is everyone. And we need to be mindful of the disparities you're making reference to, because unless everyone gets vaccinated at some point in time, the virus is not going to go away. So this is really an all or nothing, and we have no choice. We have to be all in.
All right, we've essentially made it to the halfway marker and are starting to get into the back half. We're officially starting the back half of 2020. Dan, just before we let you go, Bon Jovi has essentially already done the Living on a Prayer halftime show, as 2020 would be summed up, perhaps. So going forward on this back half of the year, what are you looking towards when it comes to earnings, certain sectors where you are placing your largest interests right now?
What I see is there has to be a better second half here. I think that we are going to continue to see economic recovery, in spite of we could have blips related to where the virus goes. But let's keep in mind that there are huge political stakes here in the second half of the year, because where the virus goes will be where the economy and the market follows, which is going to be where the presidential election goes, as well as the seats in Congress. So everybody has a vested interest in what's going to happen here. And certainly President Trump is going to do everything he possibly can to make sure that this economy is in full recovery by the time we get to the election, as well as the market, which I think will follow that economic recovery.
All right, Dan Geltrude, who's the managing partner at Geltrude & Company, joining us here today. Dan, have a great weekend ahead. And guys, coming up, Amazon Prime Day is delayed again. We'll tell you the new date.